All attendees are in listen-only mode.
Good afternoon and welcome to our webinar. Is your franchise system working for or against you? Compliance basics you must get right. My name is Kerry Miles and I'm the General and Business Manager for the Franchising Centre here at Griffith Uni. Before we get started, just a couple of housekeeping matters. This webinar will go for about 30 minutes and then we'll have 10 to 15 minutes for questions. If you have a question while our presenters are speaking, please fill in the question box and send it through. You can see the box on the control panel on the right-hand side of your screen. Please put in your first name and city that you're listening from. We might be able to get to those questions during the presentation, and if not, we'll get to them at the end of the webinar. We also are recording it, and we'll send it through to you in a follow-up email. So now I'd like to introduce you to our speakers. This year we're really excited to be partnering with BDO, a major accounting and advisory organisation, to deliver greater insights and opportunities for the franchise sector. This is a really great partnership as BDO are also committed to promoting best practice in all aspects of the franchising sector, and you'll hear more about that today. Presenting today's webinar we have Jason Daniels and Randall Bryson. Jason is a partner in BDO's Brisbane office working with clients from a range of industries specialising particularly in franchise and retail. His broad experience and expertise lies in areas of financial management including especially mergers and acquisitions, business planning, forecasting, restructures, systems as well as process and operational improvement and software development. Welcome Jason. And also we have Randall, and he's also a partner within BDO's Business Services team. He provides taxation, compliance, accounting and business advice to clients in a variety of industries and sectors, with his major focus being within the automotive, retail and franchise sectors. Welcome also to Randall. Thank you, and I'll now hand you over to Jason and Randall.
Thanks for that introduction, Kerry, and thanks again for the opportunity for BDO to partner with the Griffith Uni Asia Pacific Centre for Franchising Excellence. This is the second webinar we've done this series, and there'll no doubt be a couple more in the series as well. But today, firstly, thank you for those who have taken the time in the day to join us for today's webinar, which is, Kerry mentioned, is titled, Are Your Franchise Systems Working For or Against You? Compliance Basics You Must Get Right. As you all would know, in recent times there's been a number of cases in the media where franchises, for whatever reason, have been named and shamed for non-compliance issues. You know, the ones that come to mind that I can think of off the top of my head is obviously 7-Eleven was the start of it, for underpayment of workers, which has obviously received a huge amount of press in the media. Domino's again for underpayment of workers, and more recently for the failure to comply with the franchise code in terms of their marketing fund reporting. And only yesterday I read a report with regards to Ultratune, where the ACCC has started proceedings against Ultratune for alleged failure to comply with the franchising code. So for whatever reason, the franchise sector seems to be under the spotlight at the moment, and it's our view that this is only going to get worse before it gets better, as government agencies are becoming more united and I suppose intelligent in how they work together, but also on how they collect information from business. Single touch payroll is a good example of that, which Jason will talk about today. But we think that's only the start of what government has planned in the terms of real-time reporting for small business. So I think what we're going to see in future years is, as this technology gets better and better, the way the government departments, particularly ATO, Fair Work and so forth, are able to access, small business data and to actually, I suppose, enforce the codes, I think will only, become stronger. As Kerry mentioned, today I'm joined by Jason Daniels. Jason is the lead franchise partner at BDO, and Jason's got an amazing amount of experience in the sector that goes back over 20 years. Jason's worked with a number of groups from their humble beginnings to becoming household brands. So his understanding of what works and what doesn't is something that only a few in the industry possess. So today we're lucky enough to be joined by Jason. He's going to present most of the content today. So I'll hand over to Jason. Thank you.
Thank you, Randall. All right, so I guess just what we're going to cover off very quickly is I want to really cover off what are the 5 compliance areas that you really need to be looking at now. There's a lot of legislative change that is currently either proposed or already in place, as well as a lot of nervousness around performance and lending, in the lending space in particular. So we'll touch on those today. I want to talk about some of the examples of sort of what's going well out there and what's going wrong, and some of the solutions that others are using. And then also, I guess, just talk briefly about the half-day forum on the 22nd of June, where I propose to basically take what we're talking about today and really expand those out and get into some depth, go through how you can put a self-audit program in place, as well as making checklists and a lot of material available for people to do that. One of the things I guess to take away is that these things don't have to be expensive and they don't have to be complicated, but they do have to be planned and they do have to be carried out regularly and methodically. So understanding risk in a franchise network. Up until I guess recently, the understanding of risk in the franchise network for a lot of financiers, franchisors, suppliers really didn't look at the interaction between the various players in a franchise network and how they all impacted on each other for the long-term good of the group. So the methodology that we're putting together is really looking at 6 key areas that any franchise group really needs to consider in terms of its risk management framework. So the first one is customers. So they're predominantly the customers of your franchisees, but fundamentally where the revenue is coming from. You've got franchisee risk. So that's looking at franchisee performance, franchisee compliance, are the franchisees meeting their obligations. Franchisor risk, this is coming back to the increased compliance burden on franchisors. If we look at the Fair Work legislation that's proposed and how that might interact with single touch payroll is a great example where franchisors are increasingly under the spotlight and at risk of all of the other interactions here because of the impact on brand. We've got finance risk, so that's predominantly looking at lenders, financiers and source of funds. We're in a market where there's increasingly more information available to financiers and they're becoming increasingly risk averse. I'm going to talk about a new risk today that recently I've had quite a bit to do with, and that's around key supplier risk to franchises and what happens when a key supplier goes bad. And then regulatory and compliance. We're seeing more activity in the franchising space around regulatory and compliance than ever before, and so we'll touch on that briefly as well. So the 5 compliance areas to get right now. I think the number one risk to franchise groups at the moment is around franchisee payroll and employee obligations. So we'll get into some detail on that, and particularly single touch payroll. Key supplier risk, as I said, I've recently had a bit to do with some reviews from some of the banks where an entire franchise network has been put at risk because of the potential failure of a key supplier. Now that key supplier in both cases was not a related party, it was completely independent, but had the potential to completely unravel the franchise group. Franchisee performance. Critical to the growth of any franchise group is that you've got happy franchisees. Franchisees are happy when their franchises are performing well. This really flows right throughout every aspect of your system, and in particular is something that the banks and financiers are looking at very, very closely. Even if you're not a pre-approved franchisor with a lender, it's something that they want to understand how your franchisees are performing before they'll lend to a prospective franchisee. Regulatory and compliance. We'll just talk about briefly about each of the key regulators and where they're currently moving in the franchising space. And then lastly, the funding and financing space. Okay, so around single touch payroll and group employer changes. Most people in franchising would be aware of the Fair Work Australia, changes that were proposed back in March, that would make franchisors responsible for breaches by the franchisees. This has got massive implications for us as an industry. When you couple that with single touch payroll, the potential flow-on implications are absolutely massive for a group, and I'll touch on an example in a moment. Now, what most people don't realise that in this space is that we've got very active regulators at the moment. The cynic in me would say that the weekly press releases around different franchise groups breaching Fair Work Australia obligations were merely coincidence, or were planned, I should say. But one of the issues that we have around this Fair Work legislation is that at the moment there's a lot of press around franchisees not paying employees appropriately and not remitting the superannuation in particular. Whilst that's happening, I think we're going to find it very, very tough for the Senate to knock back the passing of that legislation. If we touch on single touch payroll for a moment, and you start to consider that in connection with the Fair Work legislation, you'll see that there's potentially massive implications for franchisors. So for those of you that haven't heard of single touch payroll before, this is actually an initiative by the ATO that is actually mandatory from 1 July 18 for what they're calling substantial employers. So a substantial employer is somebody who has more than 20 employees as of 1 April 18. Now, that's by head count, it's not FTEs. And that's where a lot of people are forgetting that particularly in the franchising space and particularly in food where you've got a lot of casual staff, it doesn't take much to actually get up over that 20 employees. Now, it excludes contractors, but it does include directors, even if they don't draw a wage. So if you've got a company that's got 2 directors, and I'm aware of some out there that have got 4 and 5, that actually counts towards your head count. What you'll be providing on each payment date, and that's the payroll payment date, so for a lot of people it'll be weekly, it'll be provided through their software, is you'll actually be providing the payment of the wages for the individual. So it'll be matched by TFN, what SGC they should be paid, and what PAYG withholding should be withheld. And there's actually a far more detailed list in the guidance. You'll be using SBR-enabled payroll software, so for a lot of people in the industry, you'll be looking at your Xero, your Miles, your QuickBooks, who are all moving down path for compliance. And basically, you'll be remitting at the same time as you remit your payroll to your staff, you'll now be providing that information live to the ATO. Now, what this is going to allow the ATO to do is to do a lot of data matching. So take, for example, SGC. Due on the payable of 28th day after quarter end, they'll now be able to match this to the employee super fund to determine whether or not that staff member's SGC was paid on time. Now, if you think about the Fair Work legislation, where it potentially holds franchisors responsible for franchisee breaches, and obviously we don't have a lot of guidance yet about what the Fair Work Ombudsman will consider an adequate system of monitoring in place, you've potentially got the interaction here where if the ATO finds that the data doesn't match and that SGC hasn't been remitted on time, the interaction of the 2 pieces of legislation could well be that Fair Work Australia actually require the franchisor to pay their franchisee superannuation. Now, this is something we believe that all employers, not just franchisors and franchisees, but specifically franchisors, need to now start taking an active interest in how payroll for their franchisees is being done and that it's being done correctly. So I think there's a lot here to be done around education, but then also systems and processes. Key supplier risk. We've recently been, as I said before, we've recently been given a couple of cases where franchise groups have actually been put at risk because of the failure of a key supplier, where there's been no ready secondary supplier available, or where the second supplier may already provide exclusive services to a competitor. We've had instances where large groups have had a supplier basically fail, and the franchisor has actually been forced to step in and basically prop up that supplier to continue supply to the franchisees. So what we're seeing particularly from financiers now is increased risk about, do you know your suppliers? Do you know their performance? Are they solvent? Do you have guaranteed continuity of supply? Are they considering a change in ownership? And if so, who is that change in owner? We actually had a case last year where the biggest competitor bought out the supplier, and that had a massive flow-on implication for this franchise group because they didn't want to renew the supply agreements. So understanding your suppliers is becoming absolutely critical for particularly the financiers and being able to get access to financing, but also knowing what your risk is to your franchisees and making sure you're doing the right thing by your franchisees in respect of performance. Which is a good segue into franchisee performance. Talking to the head of franchising at a couple of the big four banks, one of the biggest, I guess, frustrations that they have around lending into the franchise sector is that they don't believe that the sector is really doing enough around monitoring and managing franchisee performance. That unfortunately we do still see it in some groups, that we really still have a culture of getting the next franchisee sold and up and running rather than making sure we're maximising the revenue and performance for our existing franchisees. So one of the things that we recommend with the groups we work with is that we look at really investing up front in the assessment and financing stage. So if I look at some of the best practice of some of the groups, they will do a lot of work around, for example, site selection, looking at the demographics, looking at what the potential of that site is. And even though they may not necessarily provide detailed information to franchisees because of the limitations around providing information projections and so on, they're confident in the site before they get it up and running. Unfortunately, we see far too many groups that really do very little assessment around the sites and in terms of what the long-term viability of those sites are. So, for example, we've seen a lot of redevelopment of shopping centres in the last 2 or 3 years. So to what extent are they working with those shopping centres to understand if you're in the fast food business and you're in Chermside, for example, recently, where there's been a whole new food court opened, but you're negotiating a lease on behalf of the franchisee, what work have you done around what the impact of that food court could be on the opening of the new section? A little bit of upfront investment here can save a lot of cost for both the franchisor and franchisee, particularly if there are performance issues unrelated to the franchisee down the track. Looking at things like if you're signing a 5+5 lease, what's rent going to look like at the end of 10 years if you're signing up at CPI plus 2% or 5%, as we see in a lot of retail leases, versus the CPI. We live in an era where it's very, very hard to increase your revenue by much more than CPI. So the impact of those rent increases can be substantial at the end of say 10 years, particularly if we're talking about impact on valuation of the franchisee, and like it or not, that flows on to the franchisor. Initial setup, investing in your franchisees to make sure they're well trained. Now this assumes you've gone through the selection, you've got the right franchisees, but that you're actually giving them a lot of guidance. And particularly now that there's going to be a lot more pressure around HR and HR services, making sure that you're actually managing the franchisee setup and making sure they've got the right systems, policies and procedures in place from day one. So bookkeeping, reporting and compliance. in best practice, we're seeing more and more franchisors actually dictate to their franchisees what their standard chart of accounts should be, and how their systems and processes should work, so that they can actually mine that data and actually make decisions around it. So, for example, it makes it much easier to negotiate group buying around things like telecommunications packages, around insurance, etc., if you've got access to that data. And then ultimately, you can use that to then actually make the right decisions. Engaging with your franchisees is critical, because happy franchisees are going to make you help you sell more franchises. It's actually going to help with the growth of the group. We see a lot of groups start to stagnate very quickly once you start to get a pool of unhappy franchisees. As I touched on before, regulatory risk is actually becoming a big issue. We've seen it, the first couple of prosecutions under the new ACCC legislation. For those that haven't seen it, Domino's paid fines last week in respect of not providing marketing fund accounts to their franchisees and not having them audited. Now the fines themselves, I think, were about $18,000, so not big in the overall scheme of Domino's overall revenue. But it was big news in terms of impact on brand. In smaller groups, when you start to have issues with these respective regulators, and the one that's probably missing off the list is Fair Work, it starts to have an impact on solvency, for example. So the requirement now to have company auditors sign off on the solvency statement of a franchisor, company auditors are wanting to look at, well, what is the risk of my revenue next year? Now that this Fair Work legislation is before Parliament, we're actually seeing auditors wanting to know what are the franchisees actually doing with respect to SGC and PAYG withholding, where it could potentially be the risk of the franchisor. So whilst there's not legislation yet, we're seeing auditors already starting to look at that and start to ask a lot more questions around solvency. Financiers, so if you're looking to raise finance either at the franchisor level or get pre-approval for franchisees, they're looking very closely at how friendly you are with the regulators. If you're not managing that regulatory risk throughout your franchisee network, they're very unlikely to provide you with pre-approval for lending or to provide much funding to you as a franchisor, because it only takes a franchisee to either get bad press or to potentially fall over as a result of, for example, unpaid SGC or ATO payments, for that to then start materially affect you as the franchisor. It can impact your insurance and your ability to insure, particularly around some of the product risk, and recruiting both franchisees and good staff and managers. People want to work for good brands. They want to be associated with good brands, and as we're seeing more and more education and more options for people to invest in, and they're doing more due diligence, recruitment is really critical around having that strong brand and that strong performance. People want to be associated with successful brands, and I think a big part of that is managing your regulatory risk here. Now, ultimately, these all start to impact valuation, which is absolutely critical. So that was really the, I guess, the core of the presentation today. Basically from here, we want to touch on a lot of these in much more detail in the half-day workshop on the 22nd of June. We want to drill into each of these risk areas in far more detail and actually provide a series of checklists for each area that franchisors can actually do a self-audit to understand. Hopefully we will have the Assistant Commissioner of Taxation come along and talk about single touch payroll and all of the ATO changes that are coming in the franchising space, as well as at least one software developer who's doing a lot of work around systems that will actually support franchisors to monitor franchisee compliance. around everything from franchise agreements, lease management, insurance policies, right through to payroll. So yeah, would encourage you all to come along to the half-day workshop on the 22nd of June.
Thanks so much, Jason, and thanks also to Randall for your very, very insightful presentation on those areas of compliance risks in franchising and how you can work on managing those risks. As you mentioned, franchising has been in the spotlight recently, and with all those legislative changes happening and also active regulators, it really makes it imperative that franchise systems work on their compliance. So without further ado, I will now hand over to some questions. Some have been already coming through, and so keep them coming through. I've got a question from Josie from Sydney. She says, in regards to single touch payroll, do you have any idea how much it will cost to implement this kind of system?
If you've got a franchisee who's using MyOb, QuickBooks Xero, so I guess the most common systems that are out there, or I guess what I would call a current payroll system, so KeyPay, those developers have already invested in making sure that they're ready for single touch payroll. And if your franchisee is already doing the right thing, then at the same time as they hit finalised payroll, it will be lodged with the ATO. So the cost should be relatively minimal. Where we're seeing cost is where franchisees don't have robust payroll systems in place now. So where, for example, they don't have timesheet systems, where they don't, they're not already doing effectively the right thing in terms of the obligations they're paying. That's where there is some investment around getting more robust systems in place for capturing and approving timesheets, for ensuring that all the right HR agreements are in place. And some of that comes down to what is dictated by the franchisor versus allowed to be selected by the franchisee. So the reality is it can range from a cost of really nothing, it can be a byproduct of what they're doing now, and that's where the ATO are hoping it will be for most people, through to a need to really get some robust HR systems, policies and procedures in place.
Great, thanks. Okay, so I've got a question here from Steve. His question is, can you comment on the progress on the vulnerable worker laws and what franchisors need to do as a result?
I'll give you my view. I'll give you the disclaimer that I'm not a lawyer, but commercially, personally, I think it's actually going to get through. The interaction I've had with the ATO and Fair Work Australia are that apart from the franchising industry representing franchisors, they're not getting a lot of pushback, and there's certainly, I've not seen any politician willing to champion the cause publicly of franchisors in the press. But we've seen a lot of press around franchisees that haven't done the right thing. And I think politically it's going to be very hard for the Senate, particularly where control currently resides in the Senate and being very employee friendly, that I think it's very unlikely that that's not going to get up in some shape or form. I think that franchisors need to be getting ready for it. Now, whether that be doing looking at various outsource providers, and obviously some of the press around outsource providers in the ATO in the last week hasn't been positive, but there are some very good outsource providers out there. We're actually providing a due diligence checklist for selecting outsource providers on the 22nd of June for your franchisees, and I'm aware that some of you will have franchise agreements that don't allow you to mandate that at the moment, but that's certainly one path we're seeing a number of franchise groups take. Or it's putting a process in place whereby each franchisee signs a declaration with each payroll process and submits a report that they basically have paid all the obligations and everything is up to date. So I think there's a couple of ranges of things there, but I think franchisors need to be getting ready for this, and that it will be coming.
Great. Yeah, I agree. You mentioned before, there's a question here from Chris, and he's asking who is the software developer that you've been working with?
It's actually a company called Tracker. So it's a product that is yet to be released to market, but they're hoping to release in the next couple of weeks. It's a developer based up here in Brisbane.
Okay, and is that, sorry, Jason, are they going to be joining that half-day workshop or a similar kind of organisation? Okay, great. Okay.
Yes, they are. And we're trying to actually organise some free licenses for people to play with it over a 3-month period.
Oh, awesome. Excellent. Okay. Right, I do have some more questions. This one is from Christine from Sydney. She said, do you know of a supplier audit process that identifies the current risk to a franchisor and outlines measures to manage risk to an acceptable level? And she's actually got a couple, sorry, there's another part of this question too, sorry. And to what extent are people like landlords considered key suppliers?
Yeah. Landlords are very much considered a key supplier, and in fact we're seeing financiers now as part of a loan application wanting to see the detail in the lease. So they're wanting to see what are the landlord's rights in terms of annual increases, and we're even seeing pushback from financiers where they're considering those annual increases to be excessive for the nature of the business. I think that we see a lot of leases come through that are sort of sitting at 5% or CPI plus 2%, which is effectively the equivalent of 5%, where over the course of a 10-year lease, you're seeing profit very much be just eroded away. Then if you've got a marketing obligation, an outgoings obligation on top of that, you're seeing rents sort of be coming out of proportion to the remainder of the cost base of the business. And so we certainly think that the whole leasing piece actually requires its own piece of due diligence. And one of the things I'll be bringing along to the workshop on the 22nd is just a very simple lease calculator and due diligence checks to help in those negotiations. In terms of the key supplier piece, that's probably a little bit more challenging to come up with a standard checklist, but what we were looking to really walk everyone through on the 22nd is understanding what key business risk means from a supplier and working through a process of annually engaging with that supplier, because it's not enough anymore to just have that done up front. It's something you really need to be revisiting every year. And then the supply contracts you put in place with your lawyers, having some communication strategies in there around, for example, them informing you if there's a potential change in ownership, so that you can understand the risk is there, and looking at the various outs you have from those contracts. Should there be events that potentially have a negative impact on you as the franchisor, and in particular your franchisees? One of the key things there to look at, and I think you should be doing with all of your franchisors, is looking at their performance and solvency. At a minimum, getting a signed annual solvency statement from them, and that's actually signed by their accountant or their auditor, I think is absolutely critical.
Excellent, thanks. Another question here from Greg. Do you know how a franchise support office can monitor franchisee payroll along with award and superannuation compliance? Is there a software that does all of this? And can it flag potential issues?
If you're looking to use an outsourced payroll provider, and that would certainly be something that I think franchisors should be investigating. Most outsourced providers will work on a trust account system whereby the super and PAYG withholding can be remitted at the same time under single touch payroll, and that basically then naturally aligns the wages with the natural cash flow cycle of the business. In terms of software that does it, there's products out there like Deputy, for example, that will actually manage the awards. In terms of them being able to monitor it, we've been working with vendors like KeyPay, for example, where we can then force a standard setup across multiple systems and then use different reporting packages to extract that data and manually audit it. Possibly the only sort of missing link at the moment, which we can automate it if we use a standard chart of accounts, is to be able to check that, for example, the SGC is actually paid on time. the direction I think most people will head there will either be as part of the outsourced provider will make the payment, or that the through the tracker product, which is very schedule driven, you'll actually upload the receipt showing that you've paid your super, preferably via the clearinghouse, so it can all be seen in one lot, together with a declaration that it was paid and remitted on time. So that allows you to do more exception-based reporting. But that was something I was planning on going into a lot more detail on the 22nd of June, because it's a massive compliance area, I think, moving forward.
Yeah. Okay. Yeah. Sure. Thanks, Jason. I've got more of a comment rather than a question from Sue. She just said these changes have a major impact on us. We are a small franchise. Because simply this obligation, cost and risk will make our system unviable, and we are considering our ongoing involvement in franchising. So don't know if you want to comment on that, Jason, but I think this is probably something that, you know, others feel as well.
Yeah, look, absolutely. I mean, if I was to sort of make an editorial comment, it's probably been that there's a few, and particularly a few franchisees that have sort of spoiled it for the rest of us, where the bulk of people are doing the right thing. These systems don't have to be huge cost and don't have to be overly complicated, but the key is to get them established early. If you've got a group of 30, 40, 50 franchisees and you're trying to then effectively retrofit these changes back to your franchisees, there's a massive cost. Firstly, because in a lot of cases the franchise agreement won't actually allow you to mandate some of these changes. So you're going to have a lot of manual processes around effectively the franchisee, whatever the franchisee decides to do. Whereas if you do a lot of the design work here around the reporting and the systems you select to implement up front, a lot of that cost can be mitigated in that design work. So for example, standard payroll policies and procedures, we did a piece of work recently for a franchisor, which was a piece of design and implementation work for their first franchise, which they'll now roll across their entire group, which was less than $2,000.
Yeah.
But there's another group in the retail segment at the moment which now have to go and retrofit that across 60 stores. There's a huge training and rollout component. So it really is a case with some of these things, like even though they're 12 plus months away, of getting in early and getting in now.
Yeah. Yeah, so I should have mentioned too that one from Sue. She said that they're only really small too. There's mostly mums and dads, and she's got a system of only 18 people. So I guess it's those smaller systems that are going to find it most difficult to come up to speed with some of these regulations.
Yeah. The Fair Work legislation does mention that the Ombudsman will have reference to the size of the system and what would be reasonably expected of a system of that size. Now, we've got no guidance yet as to what that means.
Right.
But if you're in a system predominantly of 18 and they're mums and dads, then chances are the regulatory, they're getting advice from their own tax agents. They're actually managing their tax and their outcomes and their super actually quite differently to groups that have got a large employee base. So you've got to remember that a lot of these systems are really focused on how are they protecting the rights of employees. If they're predominantly mums and dads working in the business, then chances are they're actually not necessarily PAYG withholding employees anyway. That they're paying themselves either through dividends or other forms of distributions.
Right.
So it's to the extent here that it's actually payroll related.
Okay.
The one thing I would say, in the experience we've had with helping groups go through the outsourcing process, is that once it's up and running, it actually saves the franchise system money. It gives them more clarity around particularly labour wastage. We worked with one group recently where they've saved on average $800 a week in labour by just getting their scheduling and rostering right and making sure that the breaks were being monitored appropriately. So sometimes it's looking at what's the hidden cost.
Yeah. Okay. Okay, look, I've got another question here. It's from Steve, and he said site selection will always be somewhat subjective. So how do we best mitigate risk in areas like this, especially when you are a new franchisor with a limited number of corporate sites?
Yep. I think one of the things I think you've got to look at is, as a franchisor, I don't think particularly small franchisors do enough work when they find a site around what is this business going to look like in 10 years if I ran it. So if you're signing up to something that has 5% rent, do you know what that's going to look like and what your break even for that site would be if you overlaid a corporate model over the top of that? Because you shouldn't be selling a site to a franchisee that you wouldn't take on as a corporate site. Now, in my experience, franchisees will do about 15% better than corporate sites because they're in there running it all day, every day. It's their money. They're more passionate than a manager will be. But by applying that simple rule of thumb, I tend to find that a number that sites do tend to fall by the wayside because whilst a person might be happy to sell it to a franchisee, they're not always happy to take it on as a corporate site. I think that's just a good rule of thumb to judge by. Now, there's a reality that not all franchisees work in all sites, and I think it's how you manage that and what support you provide to the franchisee to get them up and running. That's probably the next critical step.
Yeah, okay, great. Well, thanks so much, Jason. I think we've covered everyone's questions. So we'll just finish off now because we're almost out of time. But just before we go, I'd just like to mention our franchise management forum on the 23rd of June next month. So it's a great opportunity to learn from other franchisors and also to do a whole lot of networking. Our speakers include the CEO of Endota Spa, CEO of Fuco, and CEO of Sombrero, and there's many more. There's 6 sessions as well as a group discussion. Don't forget also that, as Jason's mentioned, that part of the management forum, the day before, we've got a half-day workshop with Jason and Randall. So that's on the 22nd of June. And they'll go into a lot more detail about some of the things that they've already workshopped today. Also, don't forget we've got our graduate certificate in franchising happening, and the next intake is in July. So just look at our website and our newsletter for more information. Thanks again, Jason and Randall. Really appreciate your time. I certainly learned a lot, and I'm sure everyone did. Thanks everyone also for attending, and good afternoon. Have a great afternoon. Thank you.
Thank you.